Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, June the 23rd, and wanted to talk about what we saw in markets last week, coming off the worst week that we've seen in equity markets since 2020. And what is happening this week is we've had a little bit of rally as we started off the week, and maybe we have put in a temporary bottom into the stock market. So last week, the S&P 500 was off 5.8%. The mid-cap index was off worse at 6.5%, and the small-cap index was off even worse as measured by the S&P 600 is off 6.8%. And so over the long weekend, as markets were closed on Monday, one of the things I wanted to point out as we headed into last week, we talked about last week inflation and recessionary fears leading the cause for markets to go down. But as we peeled back the onion last week, even though markets were making new lows last week, average trading volume was down significantly, and the majority of stocks were not making new lows. So what that tells us is that there's actually more internal strength inside the market, and that is telling us maybe that the sellers have run out and there's just selling exhaustion. And that typically is a great time to put in a formation of a bottom in the equity markets. And as we entered into this week, Tuesday we had a significant rally up in the markets as the equity markets were up around 2.5% on Tuesday. And then Fed Chair Jay Powell was going to testify before the Senate yesterday and is testing before the House today. And as markets were getting ready to open yesterday, the futures were pointed for a pretty down open. But as Chair Powell got up and started speaking in front of the Senate, and he said that the Fed's main goal is they're going to continue to fight inflation as hard as they can. And he actually said that a recession is possible, and the markets rallied from the lows from the morning and closed relatively flat for the day. And that's encouraging because that tells us that what we saw last week was the market pricing in that recession, that there could be the possibility for a recession. That was priced in. And if Chair Jay Powell is saying that that is a possibility and you're seeing the markets move up off of that, and that the Fed's going to fight inflation as hard as they can to bring it down, that's kind of what the market has been looking to see and hear from the Federal Reserve. So all encouraging news. But we are in a bear market, and typically a bear market lasts anywhere between 6 to 18 months. This one has been a relatively challenging and tough bear market to be in, but we've talked about the steps to take when you're in a bear market, but I wanted to talk about the importance of staying invested through a bear market and give you some historical perspective. So if you had bought into the equity markets for the first time at the peak in 2007, which that would have been October 9th of 2007, as you put all your money into the equity markets for the first time and kept your money in the market through the end of April of this year, through the first quarter of this year, that includes 2008, that includes 2015, that includes some other relatively flat years as well, you would have had an annual compounded interest rate of 9.1%. And that is included, so that is investing at the peak in 2007 through the first quarter of 2022, your annual compounded rate would be 9.1%. However, if you had been out of the market for the best 5 days over that entire time period, your return would fall all the way down to 5.71% annualized. And if you missed the 10 best days, it falls down to under 4% annual return. So the importance of that is to stay invested through the bear market, to position your portfolio to capture the upside return of where you foresee markets moving as we do have a recovery and where you think that recovery is going to take place. So if you have questions about how to strategize and fill out your portfolio for the eventual recovery, give us a call. We'd love to talk to you. You can reach us at 904-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thanks so much.